Assalamu alaikum friends, welcome to Audit and Assurance Revision Crash Course Day 3 Corporate Governance. So what are the things we are going to cover today are corporate governance and audit committees. So let's start with corporate governance. Why do we have corporate governance in the place? What is the definition of corporate governance? It is about ensuring that companies are run well in the interest of the shareholders as well as the wider community. And it arises why? Because of the high profile collapses that happened. Maxwell, Enron, so many examples are there. Why? The high profile businesses collapsed because of lack of corporate governance. That's why this corporate governance becomes so important. Then good corporate governance means it is important for those companies which are publicly traded, especially important. Okay, it does not mean that the ones who are not publicly traded, it's not important. It is important, but for publicly traded companies, you need to comply with the corporate governance principle in order to be listed on the stock exchange. Then, maintaining satisfactory standards of corporate governance is the responsibility of whom? Those operating the company. It is the responsibility of the managers, the one who are running the company, so that they maintain the standard of the corporate governance in the company. It is not the responsibility of the auditor. Next, we are moving towards the board. What are some key responsibilities of the board? Very important. That is the management. Mostly the board here we are referring as to the non-executive director, okay, the supervisory board. Reviewing and guiding the corporate strategy. They review and also they guide upon the corporate strategy. These are some of the responsibilities of the board. They monitor how effective the company is in following the corporate governance. And if there are any changes that needs to be made. Then they select, they compensate, they monitor, and where necessary, they also replace the key executives. It is the board who does this. Align the key executive and the board remuneration. Executive and the board. The board means non-executive director in this case. So they align their remuneration. Then they monitor and manage the conflict of interest also among the manager and the board, among the board and the shareholder, like that. Okay. Then integrity. They ensure that the financial statements that the company makes, they are being integral, right? They also see the process of disclosure and communications. Are they communicated in a transparent manner? Are they disclosed to ensure that integrity is being followed? So these are few of the responsibilities of the board. Very important to know the responsibilities of the board also, because students often confuse these responsibilities with the auditor's responsibilities. Auditor's responsibilities are totally different compared to the board. So you need to know that these are the responsibilities of the board, not the auditor. Auditor just checks whether are they following the corporate governance code, right? Next, we are moving towards the corporate governance in action. This is a very important area from your exams point of view also, because these are the areas that you need to look in your scenario given to you, especially in section B of your audit and assurance paper. Are these things there? If these things are there, it shows that the corporate governance is sound. If it's not there, if lack of these things, then it's not a sound corporate governance. Number one, the board leadership and the company purpose. What is the board leadership? How it has been structured matters a lot. Okay. Then the division of responsibilities. What are the responsibilities? How they divided? Composition, how it is composed, how the board is made up. Succession. If one manager is gone out, are there anyone to replace him? And evaluation, how their performance are evaluated or not. Okay. So for board leadership and all these other things needs to be there. Number one, effective board leadership. Number two, promote long-term sustainable success. That should be the company's purpose. And number three, the director should lead by example. So if in an organization where the leadership is effective, okay, where the directors are leading by example, where the purpose is to promote long-term sustainable success, then you can say that that organization is following corporate governance and it has a sound corporate governance, good corporate governance. Number two, coming to the division of responsibilities. Independent chair leads the board. Okay. Then CEO and the chairman should be two separate individuals, not one. Both should be balanced. Balance means executive versus non-executive. It should be balanced. 50% executive versus 50% non-executive. Half the board should be independent. And those half board should be independent. And moving towards composition. Majority should be INED, that is independent non-executive director. Okay, and the board appointment should be made by which committee? Nomination committee. There are 4 committees in an organization: nomination, audit, risk, and remuneration. So the job of the nomination committee is to appoint people. Okay, so board appointments are made by nomination committee. Then appointment should be based on merit rather than personal relations. For example, whether the person is best fitted for the job or not. Then combination of skills and experience. He should have the skills, he should have the experience. Annual re-election of all the directors, and chair must be replaced after 9 years. If your board is composed like this, where elections are made annually, where the employees are taken based on their skills, that it's said to be that the company is having a good corporate governance, right? Now, continuation, okay? Audit, risk, and internal control, and remuneration. These two are the areas where corporate governance needs to be put in practice. When it comes to audit risk, board should ensure independence of IA and EA. IA means independent audit, EA is external audit. So they should ensure that both internal audit as well as the external audit are independent. Number 2, they should manage risk. The board should manage the risk and oversee the internal control. It is the job of the board. Audit committee must be established with 3 independent non-executive directors. Minimum 3. Maximum is not given, but minimum there has to be 3. Chair must not be a member of the audit committee because audit committee has to be independent. So if the chair is the member of the audit committee, that chair is not independent of the organization, right? He has business relationships with the company. So that's why he cannot be a member of audit committee. At least one member with reason and relevant experience in the board, in the committee, in the audit committee. Now we are moving to the remuneration. Remuneration should be set by which committee? Remuneration committee. And here also minimum 3 independent non-executive director. Then we have remuneration should promote what? Long-term sustainable process. For example, if you are setting a remuneration based on some short-term profits, what happens? Company will manipulate the profit because they want to increase the profit in order to get the bonus. So you should set a profit in such a way that, or remuneration in such a way that it should lead to long-term sustainable success. 3. Policy for setting remuneration should be formal as well as transparent. Everyone should know how the remunerations are set for executive director so that excessive remuneration does not come into the picture, right? We know that in the past, for the high profile businesses that collapsed was number one reason is excessive remuneration for the executive director. That's the reason. You need to now be transparent about it and disclose it. Then no director should be involved in setting his own pay. It should be set by the remuneration committee, that also which is set up by the independent non-executive director. Executive director cannot set their own pay. Then board chair can only be a member of RC, that is remuneration committee, if independent on the appointment. If when the chair has been appointed that day, if he's independent of the company, he can be a member of remuneration committee, otherwise he cannot. Workforce pay should be considered when setting the executive pay. You just cannot give your executive whatever the pay you want. It should be in line with the market rate, what the other directors are getting, other executive directors are getting in the same field, same sector, same work. NEDs, non-executive directors, are paid according to the time commitments and responsibilities. Okay. Then we are moving towards audit committee. Audit committee, how they are composed, what are their objectives, what are their functions. So the composition is, that means they are made up of 3 independent non-executive directors should be on the board, at least 3. That's the minimum. Then at least one with financial expertise. Out of those 3, one should have the financial expertise, reason financial expertise. Then objectives. What are the objectives of audit committee? Number 1, public confidence in the credibility and as well as objectivity of the financial statements. Number 2, they assist the directors in their meeting their responsibilities. Number 3, they communicate with the external auditors. Then function. What are the functions of audit committees? Remember this you should know in section B as well as section A. In section A, this might come as a multiple choice questions. Out of this four list, what are the objectives of audit committees? What are not objectives of audit committees? So you should know both the ways. Okay, what are objectives as well as what are not objectives of audit committees. In section B, if you're asked, then you should know the functions to write about. There are plenty of functions of audit committees. Number one, they monitor the integrity of the financial statements. Number two, review internal financial controls. Number three, they monitor as well as review internal audit function. They also monitor and review external audit as well as internal audit. Okay, and they are the one, audit committees are the one who appoint or reappoint or remove and set remuneration for whom? External auditor. External auditor. Then they also check whether the external auditor is independent and objective or not. They review and monitor. Then they develop and implement policy. For example, that external auditor are not engaged with non-audit services. External auditor are not supposed to give non-audit services. So audit committees make sure of that they have certain policies in the place. Okay, so that external auditor will not be able to perform non-audit services for their audit client because it is unethical. You're not permitted to do that. Reviewing arrangements for confidential reporting by employees, and also you have to see whether there are any whistleblowing in the company available or not. Now we are moving towards the audit committee and the internal audit. So the audit committee should, number one, ensure that internal auditor has direct access to the board chairman and to the audit committee. Okay. If internal auditor has any issue, they should be able to communicate directly with the audit committee or the board chairman because he's an employee. Don't forget that internal auditor is also an employee of the company. That's why he has to have the direct access to the board chairman. Okay. Number two, review and assess the internal audit work plan. Internal audit work plan. Okay. See, internal auditor, they are not independent of the company because they're the employee of the company. That's why it's important that audit committee sees their work. So that when external auditor relies on that internal audit work, they can rely on it because it is reviewed by the audit committee to check the independence. Next, receive reports on the results of the internal audit work. And finally, what if no internal audit function is there? Remember, not every organization is supposed to have an internal audit function. But if it does, then it will be checked by the audit committee. But if no internal audit function is there in the place, review need for one annually. That means every year you have to check whether there is any need for internal audit function or not. You need to review that. Okay. How do you understand whether you need an internal audit function or not? It depends. Let's say your size of your organization increased. Earlier, your company was a small business. You didn't need internal audit function. Now your company improved. It became big, large scale, right? Now you need an internal audit function. So audit committee checks this. Audit committee is the one who review whether the company needs internal audit or not. This is relating to the internal audit. Okay. Next, risk management. All companies we know they face risk. But how does company addresses those risks? They must address the risk issues so first of all they have to identify the risk that is faced. Risk could be anything, operational risk, that means that is day-to-day risk, financial risk or legal risk. Number two, they may maintain a risk register. You have to maintain a risk register. This is companies, okay? We are talking about from the company's point of view, not the auditor. They are the one who should identify the risk. They are the one who should maintain a risk register, and they only should assess the relative importance of each risk. That means not every risk is equally important or significant. Some risk is more significant than the other, right? Some has more major impact than the other. Sometimes accept the risk as an inevitable part of its operation. You have to sometimes accept it, right? Some risk you can never eliminate it. It will be there no matter what, whatever the control you have in place. Then that's it. So from your exam kit questions, these are the areas that you need to focus on. That's it for corporate governance. For section A, that is your objective case questions, you can refer to sister, this is exam kit questions, and Cameron. And for section B, That is for constructed response questions, you can refer to Saxophone Enterprise. Okay. So thanks for watching, and tomorrow we will be covering ethics and acceptance. Thank you for watching and take care.